Hello, good afternoon, investor and corporate. Welcome to SET Digital Roadshow third quarter 2022 performance review. This section will run about 45 minutes, including Q&A. Company will start the section by 30 minutes presentation, followed by 15 minutes Q&A. And during Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite BANPU Public Company Limited to start the presentation, please. Thank you very much.
Thank you. Good afternoon. It is our pleasure to have an opportunity to meet with all of you again through this digital roadshow channel that hosted by the Stock Exchange of Thailand. So BANPU just reported a very strong third quarter earning result last week, and that's reflecting our ability to capture the upside and also continue to generate a very strong cash flow. Apart from the result update, we are also preparing to discuss the market outlook today as well. So let's begin with the highlights from this third quarter with slide number 4. So BANPU's sustainability transformation is making a good progress. Some of the key highlights are shown here. The first is that we were selected by a Zhengding government in China under the policy of whole county rooftop solar PV. So we started to install about 58 megawatts of solar rooftop project with the potential to increase capacity up to 167 megawatts by next year. Secondly, we achieved further development in our smart city and also energy management ventures through 25% acquisition of Autotech Global, which is an IoT platform developer that will enhance the solution provided to our customers. And also investment in the Eurasia Smart City Fund, which is the fund that focuses its investment in new energy, smart mobility, and also industrial energy management. And definitely, we continue to generate a robust cash flow across all of our business with strong contribution from the coal and gas. As last quarter, we can capture a good higher average selling price from the rising in energy prices and also a steady increase in contribution from our greener assets. So our EBITDA for the quarter was $1.35 billion. And we also completed the capital raising through warrant exercise and also debenture issuance. So our financial positions remain quite healthy. Next slide, please. At both a group and subsidiary level, we continue to be recognized as sustainability leaders by top rating in global and local agencies such as the MSCI ESG ratings, a gold class distinction from the S&P Sustainability Awards, and we have been included in the DJSI since 2014. And also recently, we were awarded honor, which is the highest distinction by SET Sustainability Award for being recognized for a best sustainability company for at least 4 consecutive years. So as you can see, building a sustainable growth for our stakeholders through ESG leadership is the core to BANPU's strategy across all of our business units, and we will keep continuing doing it. So let's continue on our focus section for the third quarter, going to slide number 7, please. So this is BANPU ecosystem, and under the 3 core business units, which starting from the left, and energy resources, as you know quite well, is the coal mining and gas business. In the middle column is an energy generation. We have gas-fired, coal-fired, and renewable power through BANPU Power. And we also continually expanding our renewable power generation portfolio through our smart clean energy flagship for BANPU Next. And the last column, which is energy tech, is also through BANPU Next, which is our solution that include various products and developments, starting from rooftop solar, being a solar EPC and O&M. We have battery production, EV mobility as a service. We have energy trading, smart cities, and also energy management. And since this quarter, as I informed since the beginning, most of the progress and development was being done through the company BANPU Next. So we would like to take this opportunity to zoom into our energy technology business to discuss how BANPU Next will accelerate our transformation progress. Next slide, please. So BANPU Group is now in a good position to pivot our resources and expertise into clean tech ventures. We integrate our existing activities into emerging opportunities. Because of many years of experiences as the energy and power generation provider, we have developed the core competencies and also with transferable skills. So we can leverage the strong upside from our energy resources business, as well as the steady cash flow generation from our power business to invest into BANPU Next portfolio. Next slide, please. So why we think the clean energy tech is the catalyst for a sustainable future? So this slide shows you some of the numbers on the potential growth and outlook, and you will see such a significant and sustainable growth in terms of the clean energy tech sector across the world. So global installed renewable capacity is rising pretty fast. For solar power and wind, we still see projects and construction are ongoing, with the expected rate to increase around 2 to 2.5 times capacity within the next 3 years. The overall cost is coming down for the project construction, while the technology development allow us to be more innovative in terms of the business models and how to utilize this renewable energy in a more efficient way. In terms of energy storage, and that definitely would relate it to the growth of the e-mobility. So global demand for batteries, starting from lithium-ion batteries, and that's for EV, are projected to increase by 3.2 times from 2020. And install vanadium redox flow battery, or VRFB, which is another type of battery as a utility scales and commercial battery that will typically use for install in the solar farm, wind farm to enhance its reliability. The demand is also expected to grow about 4 times in 2025. And then in terms of EV and mobility, is another sector that we can see numbers of growing demand. Global EV sales are expected to triple in the next 3 years. Especially for Thailand, we were expecting at about 10 times increase in the EV sales in 2025. So these numbers reflected that our BANPU Next strategy is well aligned with these trends and aim to capture upside from this growth area. Next slide, please. So this is a summary of the BANPU Next track record since the beginning that we entered into energy technology business and around 5 years ago. So the company has made quite a significant progress, especially this year has been a robust year. So several investment and projects that we collaborate with many innovative companies that deliver energy tech solution to customers. For example, like SP Group, which is a leading Singaporean utilities. We have signed a collaboration agreement to develop smart district cooling and also other smart city solutions in Thailand. Autotech Global, which is an IoT smart platform developer. And also one of the major steps is to having about 1 gigawatt hours of lithium-ion production of battery by 2026 that we have joined hands with Dura Power and also the largest bus operator in Thailand, the Roadshow model. Next slide, please. So how are we going to do that? We have identified 4 main pillars to our development strategy. The first one is we are creating greater value by investing in a high quality, or we call it meaningful megawatts of renewable assets with the high growth and high cash flow generation potential. Secondly, we are scaling up our targeted ecosystem portfolio and also streamlining our opportunity pipeline across ecosystems. The third one is we are focusing on maximizing synergies and return with our invested partners and also rationalizing our portfolio through carefully constructed growth and of course the exit strategies. And the last one, we are penetrating a new S-curve business and technology. So if we're looking ahead in terms of like in the next 5 to 10 years, we have explored and also acquired some of the energy tech business and also expanding beyond the energy through the collaboration with expert networks and partners. Next slide, please. So let's look at some of the key numbers to ensure that we achieve real and measurable progress. So we have committed a set of ambitious 2025 targets as shown here. So you can see that most of them we are already reaching halfway. And by implementing full core strategy that I have just mentioned earlier, we are quite working aggressively to progress as planned. And looking ahead even further into 2030, BANPU Next also plan to build a strong foundations for a fully integrated clean energy ecosystem that enabling a greener, more connected, and also the efficient future. Next slide, please. So our development strategy is driven by a clear vision and also a dedicated mission, and that was developed from a BANPU Next ambition to become the net zero solution provider with one-stop solution for a smart energy. Now, let me continue to recap on our earning result of the third quarter. Let's move to slide 15. So the third quarter result reflect the value that we can capture during this volatile environment. We achieved an EBITDA of 1.35 billion and the net profit of 487 million, which is increased of more than 30% from the previous quarter. And this was mainly from the flexibility in our operation that despite the bad weather conditions in our countries that have operations there, we can still produce, and that's enabled us the opportunity to increase the sales revenue during the record high commodity prices for both coal and also the natural gas. While the energy generation business, most of our assets are in high demand, so it generates a pretty good and strong cash flow. And that's helped reduce our net DE ratio to below 1. And compared to last quarter, that was 1.13 times. And that's give us more flexibility to pursue any M&A once the opportunities come. In the next few slides, we have provided the breakdown of revenues, EBITDA, and net profit, but I won't go into details. It's just to inform you that we have those breakdown. So let me move straight to the energy resources business, starting with the gas market update on slide 20, please. So for U.S. gas market, the gas price is driven mainly by the domestic demand and supply. Less linkage to the oil price, but we're likely to be in a similar trend. So if we're starting from the demand, the graph on the left, demand in the US still remain robust, forecasted to average about 85 billion cubic feet per day of the consumption, which is 7% higher from last year. And last few months, US experienced one of the hottest summers, so power demand hits a record level used to be achieved in 2020. But at that time, it was much lower gas price back then. While the EIA also forecasted this coming winter, we are going to experience a colder temperatures. While from production, which is the graph in the middle, the high gas price has incentivized the drilling activity, so the figure shows about 5% higher compared to last year. However, the growth is much more gradual than history, as many U.S. gas producers still continue to be aware on the capital spending and also looking at the shareholders' return plan. While the LNG export are slowing down because of the outage at Freeport LNG that are still on maintenance and will not be open, will only partially open this December, but then will not be returning to full service until early next year. So that's reflected into the inventory on the right-hand side graph, which play an important role in natural gas price formation. Because of such, LNG export reduced and also growing domestic production. So we have seen higher than average injection into the storage level in the past two months, September and October. That's providing quite a storage cushion domestically for the upcoming winter. Slide 21, please. Next slide. And that's reflected into the gas price in this slide, that we see the price has been softening down due to a storage level that's increasing. On the other hand, we see the forecasted drilling activity and rig counts continue to ramp up, but as I said, it will be in a slower pace. And coming into fourth quarter, strong gas demand is expected during the winter season. So we still see the Henry Hub futures are trading in a high level and started to be at around $6.2 per MMBTU and should soften into around $5 level in the following first quarter of next year. However, all of these are highly correlated with the weather, and actual inventory outcomes will highly depend on the realized temperatures throughout the coming winter. Next slide, please. So in terms of the operation result in the third quarter, we recognize the first quarter of the newly acquired asset XTO, or we name it as North Texas Barnett Shale Gas for the first time. So the total production volume increased to about 78 billion cubic feet, up by 31% from previous quarter. And the average local price was $7.6 per million cubic per MCF. That's increasing by 15%, and we generate the EBITDA of $377 million. Apart from the good operational result, we also continue progressing well on the project CCUS, which is a carbon capture, utilization, and storage, that we're partnering with the EnLink, our midstream operator in Barnett area. And we are targeting the commencement of these CO2 injection activities by the second half of next year. Now let's move to the coal market in slide 24, please. So the coal market remains tight, though we see some of relaxation during these few months. But in terms of the physical demand and supply, we still see challenging factors that need to be closely monitored. The first one is, of course, the weather conditions in major exporting countries. Like Australia last month, the Bureau of Meteorology or Weather Forecast Agency, they warned that the heavy rain will be last until March next year. And that's because of the La Nina impact. Indonesia as well, so we continue to see rain longer than usual. Second factor is on the government policy related to energy security. The good example would be in China, that they boost up their domestic production. So if this is in a normal situation, that would impact to the seaborne market. But under these circumstances, though China increases production, but we still see the import demand from China is still growing. So that indicates that the demand in China is still very strong. And the last one is, of course, the geopolitical tension that are still ongoing, while the demand is still continue to be very strong. Next slide, please. So you can see that the coal price was coming down a bit to $350 plus level per ton. There are three main factors that drive such price softening. The first one, that it is now in the fall seasons, and during this time of the year, it is considering quite a low demand season for both Europe and Asia. Secondly, US dollar appreciated against other currencies. So the coal price that denominated in US dollar terms is also pressuring to come down as well. The third one is European countries' energy security concerns and their policies. Last 2 months, European government announced to cap electricity price at 180 euro per megawatt hour. And also they're considering to capping the gas price as well. While they have now quite a large inventory, very safety inventory level of both of coal and gas. So both commodities prices are coming down quite quickly. And Europe now is in the situation of what we call over purchasing. Since the last 2 months, you may heard the news and a problem on the Rhine River, that the water level running very low, so it cannot transport. That's why the coal that they purchased was that was committed was not being able to utilize, and that's why the price got super high in the third quarter. And now when the river level come back and the ship can operate as normal, they are in the situation called an overcommitted situation, waiting to utilize those inventory once the winter comes. However, the price that still remains at such a high level is also because of the JPU price, which is a typical price that major coal producers will agree with major Japanese utilities and be used as a benchmark for a high quality coal. So last month, we have seen Glencore and Japanese power utilities have entered into a long-term contract for the supplies of thermal coal from Australia at a record high price of $395 per ton for the delivery between October this year until September next year. So our view on the long-term coal price, it is very difficult to predict. And even the popular research forecast, they also changing the assumption quite often. So let's just only talk about next year. So we believe that it will still remain high. Let's say for our internal assumption, we say it should be above 250 plus level for the whole next year. Next slide, please. And with the continuing good market, we definitely continue our operation plan on cost control and to make sure that we be able to maximize the margin, especially for Indonesia, where we will be more flexible because it is an open pit mining. In recent quarter, we achieved the ASP of $210 per ton, while we see the continuing strong ASP trend. In terms of the pricing, most of our contracts are now index linked. Once we agree on what specific day and month, then we will turn those contracts into fixed. But there will be a time gap between the index price movement and the contract clause that we agree with the investors. On the lower donut chart, that's for Australia. Centennial coal quality, which is a low sulfur coal, high quality, high CV coal, is very much enjoyed this market because on the export portion, which is around 40% of our total production, we can basically apply the Newcastle Coal Price Index when selling to our export customers. And for the domestic part, we started to recognize higher selling price as some of the contract has already been repricing. Next slide, please. In terms of the third quarter operational result, in overall, BANPU mining achieved a total production volume of 9.5 million tons, an increase of 3% quarter on quarter. And our sales volume also increased by 10%. So the EBITDA for the quarter was $902 million. That's up by 43% from the last quarter. Next slide, please. So for the rest of this year, we expect most of our operations will be improved, especially from Indonesia that we targeted to reach 4.7 million ton level because of we expecting to have a drier weather, while Centennial will slightly increase to around 2.5 million tons. For China, it's quite stable, and we also enjoy a very good domestic market price and continue to generate quite a strong EBITDA. Like in this third quarter, we have received about $53 million, the EBITDA from China operation. Next slide, please. On the cost of production for Australia, major cost increases from lower production volume and also the COVID-19 absenteeism that not only CEY, but most of the mines in Australia also experience the same issues with labor shortage. So that we have to manage on the workmanship. And next year, Centennial is also prepared for the apprentice program to attract more labor. Anyway, we still keep our target for the whole year at around 104 or 5 Australian dollar per ton. For Indonesia, the major cost increase comes from the increase in diesel price, which is accounted around 21% of total production cost, and that's would be around $4 to $5 per ton of cash cost. And the royalty part, which is definitely increasing along with the higher selling price. And for the full year, we are targeting an average total cost, excluding royalty, will remain at about $64 per ton. Now let's continue to our anti-fragile portfolio, which is power business on slide 31. So for power business, this slide shows an overview of where we are across different geography. And right now we have total of 4.3 gigawatt of committed capacity, and around 95% of this capacity is in operation. and the rest is under construction, which we expected to be developed as planned. And we're also looking for more to scale up to 6.1 gigawatt as our target of 2025. Next slide, please. Let's start with the thermal power business. Now we have base load power plant in 5 countries with a strong and very growing demand. So I would say most of our assets report a very strong efficiency, especially Hongsa, BRCP, and Temple One. Especially Temple One, it was in a high dispatch season in the US. And also we have some gain back in terms of the derivatives from the instrument called heat rate call option or HERC call. So in third quarter is another record high performance of the power business with EBITDA that generated back to the group at $74 million. That increased by nearly 30% compared to previous quarter. Next slide, please. The consistent result that was generated from our major IPP that because these assets have limited downside on the full cost volatility since the long-term coal supply contract was secured, and the PPA allow for the pass-through mechanisms as well. So they continue to generate good cash flow, while the challenge we are facing is only in China power operation. For China, the Chinese government is working very hard to cope with the rising energy prices. So they impose such policy like increasing the domestic demand for coal, production for coal. They encouraging the annual coal contract with fixed price at 850 RMB per ton with domestic coal producers. The contract should be agreed between coal producers and also the coal-fired generator within the country. So to make sure that this power plant, they still can generate some cash flow to sustain their operation. And that's reflected in our SLG power plant that has less impact compared to last quarter. And we see a good outlook for the fourth quarter as well. So going forward, we continue our operational strategy to ensure plant efficiencies and reliability to deliver the strong availability factors and also definitely continue to generate a good cash flow. So now let's move on to renewable energy, slide 34, please. For renewable portfolio right now, we reached 1 gigawatt of committed capacities with quite a consistent operational performance from solar farm in China, Japan, and Australia, and also continue to deliver cash flow back to the group. Next slide, please. For the performance in third quarter, Australia, China, Japan, and Vietnam Solar reported good result, with the average capacity factor for the quarter was about 50 to 60% due to a better solar irradiation. Japan also continues to report consistent cash dividend of 532 million Japanese yen due to the increase from the COD projects throughout the year. For the wind project, because of not very good wind, so the average capacity factor was lower at about 15%, but it still recorded a profit contribution of $1.5 million for the third quarter of this year. Now let's move to energy tech on slide 37. So we continue on LG technology. This slide is similar to what we have explained in the focus section. So it's showing our target that we would like to achieve by 2025. So right now we have solar rooftop of 198 megawatt and we targeted to increase up to 500 megawatts. Energy storage system or the battery is something that we are progressing quite aggressively through the ownership in DuraPower, as well as the project that we are joint hand with DuraPower and Cherchai to establish the plant in Thailand to up to 1 gigawatt within 2026. And also several products and development in the e-mobility business that we have increasing the route for our service providing and also numbers of EVs that will be serving the customers along the road. And smart city projects, we have now reached up to 21 projects, and we targeted to increase it up to 30 projects within the next 3 years. And also the area that we are moving quite advanced into the Japan energy trading landscape. We have now about 428 gigawatt hours of the electricity trading capacities, and we plan to increase it up to 2,000 gigawatt hour within 2025. Now let's move to what has been a recent update in the third quarter in next slide. So third quarter updates for NTEC include that we signed an agreement with Genting government, as I mentioned earlier, to develop 58 megawatt solar rooftop in the Genting province with potential to increase up to 67 megawatts in next year. Also, the continued expansion of the e-tuk-tuk or Move Me to 12 areas now, as well as fleet expansion. We have about 250 e-tuk-tuks in operation and about 115 e-tuk-tuks under registration projects. Also, Evolved, which is regarded as a leader in Thai market, since they are not only cover large amounts of charging stations, but they also doing the EPC for other brands as well. And also for the right column, the energy trading, we continue to secure electricity supply with the KEPCO through baseload auction for the period of April 2023 up to March 2024, and also engage with more than 20 small to medium-sized clients with annual total sales volume of 5 gigawatt hours. Next slide, please. For smart cities and energy management business, BANPU next acquired 25% interest in the company called Autotech Global. This company is a Thai-based automatic IoT platform developer. They focusing on energy management for office buildings and hotels. And this acquisition will definitely bring on capabilities in Internet of Things or IoT space and support the growth of BANPU Next portfolio in terms of energy management business. And also recently we invested about $15 million into Eurasia Smart City Fund. By Eurasia is a leading global private equity company with asset under management of 32.4 billion. And they have aligned investment strategy as BANPU Next with focus on new energy, smart mobility, and also industrial technology. And this fund will provide us an opportunity for BANPU to return on investment and also keep ourselves updated into energy technology landscapes with potential opportunities to scale up and expand the BANPU Next ecosystem further. And that's all for our third quarter update. Let's continue with the Q&A. So if you have any question, please feel free.
Do you have any question? Okay, the section has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investor and corporate for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much. ขอบคุณค่ะ